over the past 50 years. Silver's in a catch-up. And I think once you get up there, certain things are going to happen other than just silver and gold advancing. In particular, I think the stock market is in a topping process. I say process because the stock market rarely just peaks and collapses. You go back and look at the 2000 top or the 2011 top, the 2007 top. It's laborious, spanned a year of this topping type action. And before it finally, fell apart, ultimately. Sometimes with a crash and sometimes not. 2000 to 2002, there never was really a crash. It was just a bloody decline. I think that's about to occur, which means what? Well, it means that people who have money in that category have to figure out a place for it to go other than there, unless they just want to put it in cash. And a lot of money managers, I can tell by the action of gold, for example, have already begun that move into the monetary metals. That happened last October. Gold broke out of a spread relationship to the S&P. It had been in a 10-year wide basing pattern, and gold popped through the top of that range on the relative performance readings and has surged since, meaning I'm the category that beats that category, okay? Now, the more that becomes obvious to the average investor, the more pain they feel from their portfolio suddenly dropping 30%. They're going to put it somewhere. They always do. And gold is almost always a prime beneficiary. But then this time around, we got something different. And we've been talking about it for over a year or so. And that is the U.S. government debt market, bond market. We already know the Japanese bond market's in crisis mode. It has been for some months now. In fact, that new prime minister, who I think got elected about a year ago, she said, we're going to print to defend that piece of paper. Okay, well, they've been doing that. And as if that'll help it, that just destroys the value of the money unit in terms of its buying power ultimately. But that's their measure. That's their metric. And we'll do the same thing. Have no doubt that the central bank will do what it has to do to defend the U.S. bond market. Because the U.S. T-bond market, I'm talking the long end of the debt market, 30-year bonds. If you look at the price chart, T-bonds crashed effectively. We got bearish in 2020. Price of T-bond futures then was at the 190, 180 area, 180, not yield, I'm talking price now, which is the opposite of yield. You crash down to 117 and a half in October of 2022. So for about a year and a half, there was this huge collapse in bonds, rise in yields. But since then, 23, 24, 25, now into 26, it's lateral. Yields are high. They won't top out. Price is suppressed, depressed. It can't seem to get a rally going. So, the
warning signs are no longer hiding in the shadows. While investors celebrate record highs and policymakers insist everything is under control, a far larger threat is quietly building beneath the surface. Government debt is spiraling, bond markets are flashing distress signals, and capital is beginning to search for an escape route. If this fragile system finally cracks, the consequences could reshape stocks, currencies, and wealth itself. And according to Michael Oliver, the market may already be telling us exactly what's coming next.
Stanley, CIO, about 6 months ago, I think, said, the old notion of 60% stocks, 40% bond portfolio allocation concept is invalid. It should now be 60, 20, 20. There's a modest change, but the 20% is gold, not just T-bonds. He was recognizing that the T-bond market's not behaving as an alternative. And while the stocks have rallied despite the war continuing, after that false sell-off based on the war, you don't sell stocks based on transient news. Even tariffs didn't work, remember? Everybody sold stocks based on tariffs. Well, tariffs haven't gone away, yet the stock market went back up. Same with the war news. It went down initially, now it's back up. There's other things driving it, and those things are about to unfold the other way. But that T-bond market right now is technically in a very precipitous position where, and I think the Fed knows this, where it looks like this congestion that it's had for 3 years of trying to turn up but can't, lateral congestion, high yields, not dropping at all. Looks like it's ready to break down again in price, higher yields. Economy can't take that. The Fed, Williams, head of the Fed, New York Fed, back in November said, Fed's going to start buying bonds. He said the reason was to provide liquidity to that market. Well, the real reason was to support the damn thing. But if you look at bonds since November, they have not gone up. They've gone down in price, higher in yields. So whatever they've been doing may have slowed the decline in price, but it hasn't stopped it. And it's not providing an alternative to the stock market at all. It's a negative to, if you've got stocks and bonds, the bonds aren't providing any positives anymore. And they look technically like they're ready to have a panic. Now, I noticed that about 2-3 days ago, Jamie Dimon came out and said, we've got a bond crisis coming, and we're going to have to deal with it. It's not going to be avoided. He didn't mean corporate bonds. He's talking government bonds. And he did not just U.S., it's global. Most of the Western governments, and we know that Japan's in trouble. That's too big of a market to have a problem. I mean, that's far bigger than the stock market. And yet when you turn on financial TV, what do you hear? War news, earnings, how's AI doing, et cetera, et cetera. I'm not talking about the government bond market. I don't know why not. It's a nuclear event. And by our metrics, it's about to get triggered again to where it's going to make headlines. Well, everything is 52-card pickup when that happens. Gold knows this. Gold's discounting the ongoing decay in the money unit. And the central bank is going to print, like the Japanese prime minister said, to defend their debt.
What makes this moment different is the scale of the risk. This is no longer just a debate about inflation, interest rates, or another temporary market correction. The foundation of the financial system itself is being tested as bond markets weaken under unprecedented pressure. If confidence begins to break, trillions of dollars could be forced to seek safety elsewhere, triggering a powerful shift that could redefine the investment landscape for years to come.
So that's what we're sitting on. So then the question is, well, if silver and gold go up to a new level, that's going to reflect that change in reality. And this time around, I suspect that the fundamental horizon is not just going to be like, oh, we got a mortgage crisis, it will come and go. Or we got a dot-com bubble, it's going to come and go. This time it's far more serious, that will upset many notions, many institutions, and many markets. And the prime beneficiary is going to be monetary metals.
Why isn't the... All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Click on the link down below in the description box and use promo code COSM10. Now let's get back to the video.
And P in the broad market sniffing this out. Because if we do have a bond crisis, wouldn't it?
That's fine with me. I prefer to have a market top, stock market top, without a headline. You go back and look at the prior ones and you'll say, well, the public wasn't really aware of why it was rolling over. And it was maybe 6 months to a year off the top before you finally started getting stories that people said, gee, I didn't know that. And yet there were people who knew it. You've seen the movie The Big Short, okay?